this week some really important earnings. And again, in the next 2 weeks, we get a lot of earnings. We're getting some Magnificent Seven stocks this week. We're going to get Tesla tomorrow after the bell. Tomorrow, before the market opens, we'll get GM and UPS and GE. We'll get, before the opening bell on Wednesday, we'll get Boeing and AT&T. After the closing bell on Wednesday, we'll get Meta, IBM, we'll get Ford. Thursday, for the opening bell, we'll get Caterpillar. After the closing, again, I can't go through them all, but a lot of important stocks this week. After the closing bell Thursday, we'll get Microsoft and Alphabet, Intel, and we'll get Snap. So Thursday could be a very important day with Microsoft and Alphabet. And then Friday, we'll get Exxon and Chevron. Important earnings. I can't name them all here, but you can see we've got a lot of big companies reporting this week. Now, I told you that I was looking for a bounce off the 20-period moving average. It can happen two different ways. Friday's low can hold and we can bounce. Now price is trying to rally. Closed off the highs. There's possibility we go down and form a divergence and slightly take out Friday's low and try to find a bottom. And those are the scenarios that I talked about over the weekend. Now, assuming we can get a rebound back up to try to fill the gap at 5,200 or maybe a new high above 5,300, which I've been talking about on the weekly chart. Remember, the Dow wasn't participating in the sell-off to new lows. Last week, when the nasdaq and S&P were dropping, they were playing catch-up to the Dow that had already dropped. Could be getting wave 4, and it could get a wave 5. If the Dow has topped, see it get one more push lower. And that's why I was talking about possibly taking out Friday's lows the weekend. I'm looking for some kind of bounce out in the 20 period, or if we don't get it, we drop below the 20 period, then that becomes resistance, the 20-week moving average. About it at great length and detail. But the Dow up 253 points, up 0.67. It was up over 400 points at the highs. A little topping tail intraday. So again, we'll be looking for a test of Friday's lows for the S&P 500. Remember, the Dow did not sell off on Friday. It had already bottomed. It still may more push down. S&P, it was up 43 points, up 0.87, but it was up around 0.5% at the highs. It gave it back. Now, again, momentum is still bearish for the S&P 500, but watching that 20-week moving average, NASDAQ was up over 1%, and the Russell was up just over 1% as well. VIX was down nearly 10%. The VIX dropped by 9.5%, dropping back below 17 at 16.94. Fed meeting coming up in just over a week. We've got earnings. We've got Magnificent 7 earnings this week. I'm paying attention to is the 4-hour chart with futures, because we had this little divergence form here, and that's given us the bounce, hit the lows with the futures, with tensions in the Middle East, with Israel striking Iran, and had a big recovery after the market saw the strike was limited. The odds greatly increased that that situation is now behind us. So the market, again, with these geopolitical issues, is rattled. It was, as I pointed out, it was rattled initially when Russia invaded Ukraine, but then it bottomed out. So are we trying to do that here? Same thing when Israel into a ground campaign into Gaza. Initially, the markets were rattled ahead of that, but then when it happened, the markets ignored it, shrugged it off, and bottomed out. Sometimes these geopolitical issues, the market short term, sometimes the market shrugs it off, sometimes they battle the stock market a lot. I told you that I thought that Israel has de-escalated the situation, so I think the issue is behind us now. The market will be looking to earnings and the Fed and the rate cuts and so forth. Watching that low that was made with those tensions in the Middle East, 4-hour time frame, almost equivalent to the 60-minute chart of the S&P. Not perfect, but we came up to the red dots and stalled. We tried to rally here, got a little bit of a green, it got back above the 10 and 20 period moving averages. But if this goes negative and we start to sell off, you could form a divergence or confirmation of a higher low. We can build upon the rally and see oscillator go positive territory. Then again, maybe we just get a little bit of a pullback and go and go into negative territory. But I will be watching to see if the oscillator goes into negative territory. If it does, do we validate a higher low above this low over here, surrounding tensions in the Middle East, or do we get a divergence and go down and test that low, maybe move slightly under it, and then try to bottom out, have the S&P test that 20-week moving average again before we get a bigger rebound. So I'll be watching to see how it unfolds here. It could play out either way, but again, we try, if we try to find a bottom around the 20-week moving average, you might try to rally up to 5,200, a 5% gain from the levels that we were at there on Friday. Or if we form a divergence in the weekly time frame, you might move above 5,300, a bigger gain. So again, do we try to form a bottom here on the S&P 500? You have a divergence, might not be done yet, or it could confirm a higher low. We'll be watching. Do we get a bottoming process? Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, please let me know that by supporting the channel. I don't have any sponsors. They contact me. I turn those sponsors down because I don't want to sell you a bunch of stuff. I just ask that you do what you can to help out, to support the channel, but I do need your help in order to make it work. So please consider helping out today. Or just follow the link below to take you to a secured site. You can donate any amount you want. You can make it a recurring donation. Please consider helping out. It would be so encouraging to hear from you right now. So please consider doing that today. The VIX, that black candlestick, potential reversal bar, as I talked about on over the weekend, and again on Friday we got that bar dropping down about just under 10%, dropping back down, losing the 10 period. Again, I told you this could be marking that we're forming a bottom surrounding the 20-week moving average that may give us a rally of at least 5% to go back and fill the gap at 5,200, maybe make a new high in an overall topping process as well. The upper channel line above 5,300. I believe we're forming a top. I told you we can sell off, just start having the bottom fall out of the market, or you can drop. We did in November where we dropped 6%. Well, we're down about 6% now in November of 2021, and then we rebounded it up to a new high. I talked about that scenario for a very, very long time, and I believe that an overall topping process is under construction. There are different ways it could play out with a lower high, a higher high, or just move into free fall and get feeble bounces. My guess is we're going to try to bounce off the 20-week, but we lose that level, then all bets are off. But again, I think that this is suggesting that we're trying to carve out some type of bottom, potential 9 count that could form on the S&P tomorrow, and on NASDAQ, should it continue to drop, could form a 9 count the day after that, 2 days from now. P's at bar 8, NASDAQ's at bar 7, showing price exhaustion. Pointed this out. We're stalling at these trend lines again on the VIX weekly chart. We're seeing the MACD go positive. It's given us some volatility, but if it starts rolling over, it buys us more time, and we can go back and try to fill the gap or even move to a new high on the S&P in an overall topping process. We're stalling at the trend line here from the peak right there and right there. If we go back further, we're stalling at that dotted red line right there. VIX turning down this week after getting a topping tail in the weekly chart last week, as we've talked about. So we could try to find a bottom around the 20-week moving average, either ahead of the Fed, forming a bottom ahead of the Fed, and try to rally Fed, or we could try to form a bottom ahead of the Fed, rally with the Fed if we try to form a bottom. But again, the risk-reward model. Again, back over the top, told you about the divergences here and price swings, which I'll show you. This video 4 weeks ago, we were peaking and told you about a post-Fed sell-off. We peaked the very next day on NASDAQ and the Dow. 1 month ago, we're saying there's no way that the market's going to sell off. And what does the market do? It has a significant drop. Now it's becoming oversold again. So again, maybe we try to find a bottom either this week or maybe with the Fed next week or something. So I'll be watching the indicators right now. Signals are bearish. Like I said over the weekend, if momentum tries to shift, then we'll see if we get some kind of rebound. It may be that we have to drop further before we get a rebound. Please keep in mind, signals remain bearish. Momentum shifts back up and they turn back to bullish, we can get a big rebound if you can get back above the 10-period moving average. We're down here at extremes, so again, we could try to form a bottom here in the not-too-distant future. We have to go lower first, remain at extremes for a little while, but it could be that we try to carve out a bottom ahead of the Fed. That is certainly possible. Make you aware of one thing I'm looking at. I told you here back up at the top we had power swings and other indicators warning again we were going to turn down. It was forming a divergence. The S&P 500, now we're down at extremes again. We've had the S&P drop by 6%. It may not be over. We could attempt to see some type of rebound surrounding the 20-week moving average. If we drop below it, hold below it, that's bearish. If we bounce off of it, that's short-term bullish. Or dip below it and form a bottom surrounding the 20-week moving average, that's bullish. To be aware of starting to move to extremes again, some of the indicators that warned about the divergence of a top. And remember, the S&P now in 3 weeks has wiped out all the gains, but in January, NASDAQ wiped out most of the gains. Can they rebound around those 20-week moving averages? Now, if we try to find a short-term bottom around the 20-week moving average or move a little bit lower and try to find it, again, I'll be watching the gap fill, but it's way up here at 51.99. But again, when we broke the rising wedge, you got a bearish reversal of conditions. You backtested it, filling the gap up here. The bearish reversal of conditions has remained. Red bars, red cloud, red dots. I'll be watching. Do we get any kind of green here on the oscillator anytime soon? And same thing here. Again, do we find some type of bottom? We may have to go lower before we do, but do we see some kind of green going on that gives us some kind of bound? We've got a 7 of a 9 count going on here. We went sideways for 7 weeks, and again, we peaked a month ago over there the day after the Fed meeting, like I was talking about, and the negative multiple point negative divergences played out. Bearish realignment of the moving averages. S&P is not quite there with the 20, but the 10 is below the 50. Here we have both the 10 and 20 below the 50. So again, we'll be watching. Do we try to form some type of bottom? We're already below the 20-week moving average and claw our way back above it, or go a little bit lower and claw our way back above it. Then you might try to find a bottom surrounding that 20-week moving average. Continue to drop again without rebounding back above the 20-week moving average here on NASDAQ. Then you've got these 50-week moving averages. So again, I'm watching to see, do we drop below the 20 and stay there? Or do we recover and try to get back above it? And if you recover, you can form divergences, end up forming divergences, or you could end up confirming a lower high. So we'll be watching how this unfolds going forward. We're likely in a topping process, can unfold in a couple of different ways. I've talked about it at great length and detail. The S&P gapped higher at the open there, and then we pulled back and tried to fill the gap. Didn't quite do it. But again, came just shy of it. We did fill it on an intraday basis there, but not on a closing basis. And attempted to do that. Got a little miniature inverse head and shoulders. Broke out of the neckline here, a slanted neckline, and got back above the 250. Got back above the 200 here. We'll see if we can remain above those levels. Start dropping back down to try to fill this gap right here or test these lows. So we'll be watching that. But the bullish diversions I talked about over the weekend did play out, and that gave us this rally. Now we have those negative diversions on the 5-minute chart. It's giving us a pullback to the moving averages. So we'll see. Do we build upon the rally, or do we go back and test the lows and maybe fill this gap here on a closing basis? It's giving us a breakout of the bullish falling wedge. Here on the 15-minute chart, you can see it. Again, we could back test the trend line, and we could have established this as a bottom. Or again, you might go down and get one more push lower. If we try to form some divergences with this previous low. We did have a divergence, as I've mentioned over the weekend, at these lows here that we formed on Friday before gapping up today. It may be that we get a larger divergence here on some of these intraday charts, but form a 9-count buy signal tomorrow. I'll talk about that later in the video. Been talking about this divergence on the MACD in the 60-minute time frame that played out. Again, we had these little divergences that were forming. It played out. We turned up. We had a breakup. We had a gap. We pulled back off of the trend line, and then we broke through the trend line, cleared the cloud, cleared the momentum line, the momentum cloud, momentum line, and we cleared the downward trend line of a bullish falling wedge. So again, do we back test that move and then go higher and establish this as a bottom, maybe fill the gap there? Or do we get one more push down, form a divergence on indicators like the above their 20-day moving average? We can confirm a higher low, but we can also get these divergences and get something like that. You'd have a triple bullish divergence right here. So again, I'll be watching. Do we try to form a bottom rounding our 20-week moving average? But we did clear the trend line. We did clear the momentum line and the momentum cloud. We'll see if we back test. Again, I think we can come back and fill this gap. That would be a 5% move from the low there on Friday after filling this gap right here. and again, trying to bounce off our 20-week moving average. But rally back up, you've got your 200 period up here, you've got your gap fill, you've got your 78.6 Fibonacci. So we'll be watching, does this low hold or not, or do we move just below it? And if we do we form triple negative, triple bullish divergence, I should say, on some indicators? But watching this gap fill area in the 20-week moving average. Now here is the 60-minute chart with the RSI, and the RSI reached extremes and we bounced. RSI moved lower than these lows over here. So again, it could be that we form a divergence right here or try to confirm a lower high if we try to back test, or a higher low, I should say, try to back test and then go on our way. If we pull back here, or if we move to a new low, you could form a divergence right here on the RSI. And again, how it unfolds. Again, we turned off of the trend line a month ago. I told you the sellers were lurking there. We only went 3 points above that level. NASDAQ and the Dow could not move to a new high. S&P only went 3 points ahead. We went sideways, and then we got the drop. Because the divergences didn't play out immediately and we went sideways before we got the drop, it led to people to believe, oh, they're not going to play out. This time it's different. Divergences played out, and they played out swiftly once we began to break these 200 period moving averages, as I've talked about at great length and detail. Now again, if we hold below the 200 or go back up and fill the gap and then drop back below it, then that's going to be bearish. Could just get a recovery, but there's still the possibility that we attempt a rebound to try to move to a new high, as I've talked about. We are going to go lower again. We're going to have to drop back below the gap fill area, the trend line. We broke out above the trend line, and the momentum cloud. We tried to get above it here, and it failed. We dropped back below it. We get a back test, establishing a higher low, or are we not done? We get a lower low. Maybe get a 9 count perfected signal that might give us a shift back up in momentum. I'll talk about that later in the video. We'll 9 count tomorrow. S&P loses the low from Friday. We have our 100 period and a low end of the cloud right there. If you lose that, you've got this 38.2 Fibonacci here at the 48.21 area. Drew this trend line in before. It's a parallel trend line before we ever reached it, and here we are tagging it, this parallel boundary to the upper boundary that again, we've been seeing the sellers coming in at the upper boundary, the buyers come in at the moving averages. Now we had the transition where we dropped below the moving averages, below the cloud, and now that 10 period's acting as resistance and the cloud is rolling over. If we can get a bounce here, I'll be watching that 10 period moving average. If we go lower, again, this channel may change. Lines and channels do change all the time. So again, I'll be watching, do we try to get traction here? Can Friday's low hold? We'll be watching it again, this 100 period very close. Our 20-week moving average, and I told you if we can get traction here, we're looking for a lower high or a higher high, or maybe breaking slightly below this level and then doing that if we can get a bottom surrounding our 20-week moving average. We slightly violated it there on a Friday. We still may do it. Sometimes you do it a little bit and find a bottom here. Other times a top over here. Sometimes you bounce right above it like we did over here. But we're going to be looking, do we try to find a bottom surrounding this level? You lose this level, then it becomes resistance. That has to get back above it. S&P is trying to bounce off of it. That 20-week moving average, almost equivalent to the 100-day moving average as I have marked right here. Very, very close. The conversion of the 20-week, it converts into the 100-period moving average. Now, we reach an extreme on my McClellan oscillator, but it still might try to form a little divergence if we get a bounce. If we can bounce off that 20-week moving average or dip below it and bounce. We pull back and back test the trend line we broke out of today on the 60-minute chart. You can get a higher low if you start moving down to try to take out Friday's low. You can form a divergence on some indicators. I see something similar with stocks above their 20-day moving average. We reached extremes. Even though we turned down on Friday, had that bad day on Friday, we had still turned up here off of extremes that could still form a divergence. May either give us a bounce or try to form a short-term bottom, or you can get a higher low. But just pay attention. NASDAQ got an inside day, did NVIDIA, which again, that's a bullish Harami pattern. Candlestick patterns have to be confirmed. And again, we broke that losing streak in the market. He had that 6-day losing streak. Same thing, stocks above their 20-day moving average on the S&P. We reached extremes. We had that sell-off on Friday, and the market sold off to that 20-week moving average where we had turned back up here that day and continued to turn up here on Monday's session with the stocks above their 20-day moving average moving off of single digits. So again, if we do get a further sell-off, I'll be watching. Can we get a higher low, or do we form a divergence and go get a lower low? Do we form a divergence with stocks above their 20-day moving average? Do we see more volatility? And I'll be watching. Again, do we find a bottom surrounding that 20-week moving average? Below Friday's low? Above it? See a 5% rally in the market. Go back and fill the gap. If we attempt to try to find a bottom with the S&P 500, either here, filling the gap down over here, trying to bounce off the 20-week, or coming back and taking out that low and finding a bottom and forming a divergence on some of the indicators, or maybe doing something like this, where you come up and you go a little bit higher and then come down and then go up. But do we find some kind of bottom surrounding that 20-week moving average? Now, if Friday's low can hold, if it can hold, S&P having dropped nearly 6%, again, the 78.6 Fibonacci is right here at 51.78, which is right at the same level with our gap fill at 51.99, both at that 5200 area, just below it, a point or two. If we can see a rebound or go a little bit lower and then rebound, again, going to be looking at the gap fill, going to be looking at whatever the 78.6 Fibonacci is, should a Friday's low hold, or whether we take it out if we can bounce around that 20-week moving average. But we're breaking the 6-day losing streak now on the S&P. I told you there was a pretty good chance that was going to happen. The question is now, are we going to try to bounce surrounding the 20-week or go back and take it out and stay below it? My guess is we're going to try to bounce. And if you do, again, you come up to at least this level and still not make a new high, you're looking at a 5% recovery just from our lows. It could be more than that if we drop lower and form a divergence. So again, whether a divergence or whether Friday's low can hold, we'll see. I'll be watching to see if we get a recovery back up to the 5200 area here on the S&P 500. Now, quickly, I just want to draw something to your attention. We got an 8 of a 9 today. Now, again, sometimes the sequence counts with 8 and 13 counts. Sometimes they play out immediately. Sometimes they don't. Other times you get where they just produce counter trends. Other times reversals. Over here we got a 13 count and it just produced a little bit of a pullback and sideways correction to get the final push higher. The times you get these counts and they play out immediately. It was the 9 count that marked our bottom in October. We had a 9 count over here. First low that formed in late September, and then we got a low just below it at our first October bottom before coming back and getting the second October bottom. But sometimes counts play out immediately. Other times you get counts and you go beyond those levels and then they play out. It shows price exhaustion up and down, and we're going to get a 9 count possibly tomorrow. 9 count could just mean that we get a bounce. You know, maybe we get a 9 count, we go a little bit lower and we get a bounce, and then we end up, that's it. You get a bounce, that's it. Or maybe you get a bigger bounce. So it marks a reversal for the short term. Over here, it was just a pullback. And then we got a trend extension that followed. And this one ended up being a corrective move, really kind of going sideways right after it. That gave us the final peak there, at least so far. The counts show price exhaustion, and we did complete bar 8 of 9 today. So again, if we complete a 9 count, it could give us some kind of bounce. Should the count complete? If we close above the bar from 4 bars ago, the count will be canceled out. 1, 2, 3, 4. So if we close above this level right here, which we moved above it on an intraday basis today, this level right here from bar 5, 4 bars ago, then the count will be canceled out. Counts don't complete. But if we turn and turn down, close below that level, you have a 9 count. The 8 or 9 bar has to be the low of the count for it to be a perfected buy signal, a bullish signal. So far, bar 7. Bar 8, we rallied today. So if we sell off tomorrow and make a new low and start forming a divergence on some signals, like I've been looking at that futures chart in the 4-hour time frame, then I think we might try a rebound back up. Now, whether that's going to be a rebound with the Fed or whether it's going to be a rebound surrounding earnings, we'll be watching to see if we try to form some type of bottom And again, the Fibonacci's might change if we move to a new low, so we'll be watching. We complete bar 8 of 9, and bar 7 is the low of the count on the S&P daily. Again, NASDAQ's dropped 8%. It's come back to fill the gap here, and again, got an old indecision today. Side day of the previous real body, the wide range body, we had a decline breaking down from the trading range, which again, sideways for 7 weeks, but it played out. We'll be watching. Do we try to find a bottom or go a little bit lower and try to find a bottom? Or do we have a continuation bar here that gives us a bigger self? We're on bar 7 of a 9, and again, bar 8 or 9 could be the low of the count. So far, bar 6 is the low of the count. I said these counts, again, they may not play out. Sometimes you get 9 counts and you get an immediate trend extension to the downside. Sometimes a count just gives you a bounce, but sometimes it produces a reversal. If it does, well, we got a gap way up here on NASDAQ. And again, we're going to be getting a boatload of earnings this week, next week, and the Fed meeting next week in a week and a half from right now. Some things to be aware of. Do we try to find a bottom? We're below that 20-week moving average and climb and get back above it, but we do have a bearish realignment of the moving averages here. 10 and 20 are dropping below the 50, suggesting either we're going sideways in a larger topping process or we're starting a new downtrend series of lower highs, lower lows. So something to be watching should we attempt some kind of recovery. I told you that we were seeing that go sideways because the institutions were selling overvalued tech stocks. That played out last week. The volatility of tensions in the Middle East, we had concerns about a hawkish Fed, had a tech sell-off. We're going to be getting earnings here. Some of the Magnificent Seven stocks. Apple's trying to form. Apple sold off. Nvidia sold off. That weighed heavy. The market. Apple is trying to form a bullish divergence on the RSI MACD. If we can get traction here off of the 400 period moving average, again, still may attempt a recovery, but I'm watching Apple, I'm watching Nvidia, tech sector. NASDAQ's now dropped over 8% after peaking just over a month ago. Went sideways for 7 weeks. It gave the illusion the NASDAQ was going higher when it was not. It was making a series of lower highs, going sideways, peaked 1 month ago. Keep your eye on Apple with the bullish divergence it's forming in the daily time frame. We did have that double top on Apple. Could be that Apple topped and it's getting a 5-leg push lower here. That may or may not be done, but if it is done, it's possible that Apple sets up a lower high if we do now have a 5-leg push higher that stops making new highs. I'll be watching, are the divergences done yet, or are they still under construction? If the market goes a little bit lower, they could still be under construction, but something to pay attention to with Apple. It used to follow it, now it follows Nvidia. Now, Nvidia, after losing 10% on Friday, we dropped 10% back to support right here. These levels of support here and the gap here, the gap support. This is support right here. We went and hit it. We got a bullish inside day. So again, can we rebound back up at this level? If not, you're going to go back and probably try to fill the gap if we can't do it, which is down at the 670, 675 level. If we can bounce off this level of support, that might help NASDAQ, or come down to it. We didn't quite reach it, but we're just above it, and try to rebound here at the gap support area. Even if we do go lower, do we try to rebound? But we were up 4.35% today after dropping 10%. Again, I talked about this peak over here holding. We got a bear flag. Remember, I talked about this at great length of detail. That played out now. And I told you that put pressure on NASDAQ again. NVIDIA peaked before NASDAQ peaked, and NVIDIA peaked back in early March. Went sideways, so did NASDAQ. And so now we've seen this drop, and NASDAQ has dropped. So I'll be watching the support level on NVIDIA. I'll be watching Apple. If they can recover, so can NASDAQ. A couple of important economic reports this week. We're going to get the GDP on Thursday before the market opens for the first quarter. Supposed to come in at 2.2%, previously at 3.4%. So that's going to be important. And then we're going to get the PCE inflation data on Friday before the market opens, the Fed's favorite gauge of inflation with personal income and personal spending. The PCE data supposed to come in at 0.3% on a month-over-month basis. On the core month over month, the same 0.3%. And then we have on a year over year basis, the PCE headline number is supposed to come in higher at 2.6, higher than the 2.5 previously that we got last month. And then the core year over year is supposed to drop down to 2.7, and previously it was at 2.8. So you have one increasing, one dropping. We'll be watching. And then we have the Fed meeting the following week. Fed Fund Futures pricing in just one rate cut for 2024, either in September, November, or December. One cut, that's it. And then the second cut in 2025. Remember when Fed Fund Futures was pricing in 6 and then 7 cuts, the market went up and it priced in 7 cuts. It still had 7 cuts priced into it. Fed Fund Futures later adjusted down to 3 and 4, and then most recently with Powell's new tone, no rush to cut and higher for longer. Now that's been adjusted to 1 or none. The market sold off last week for 2 reasons: tensions in the Middle East and because of Powell taking that hawkish tone. I told you the June cut was going to be canceled. Immediately after that, we saw the July cut. Now, again, the inflation, which I told you was going to happen, ticking back up. Those rate cuts are disappearing. Market is going to readjust. Actually, the stock market is going to pressure in a bear market based on the cuts. Herd believes the opposite. The herd believes that the cuts are going to give us this new bull market, even with the sell-off that we've already got now. It's now dropped 8%. S&P's dropped 6%. People that were telling us that that was not going to happen, they're telling us it's now over. Many of them are now saying it's over. Exactly what they did the 2022 top when they told us the Fed is already is already priced in, and we sold off. They started telling us what a wonderful buying opportunity it was. Look, I think we're going to bounce. I think we're going to go to, 52 or maybe a 5,200 or maybe a new high at 5,300 for a topping process. I told you that's what I'm looking for. If we bounce off the 20-week moving average, break it, you lose it, hold below it, and get back above it, then that's bearish. Talked about the 3 different scenarios. We'll see if we attempt a rebound with earnings, or do we form a bottoming process ahead of the Fed and try to rally with the Fed. I told you the Fed meetings, the Fomc meetings have been calling turns in the market. They've been marking bottoms and tops and continuations. And recently at the October low, we got a bottom, a continuation, another continuation, and then a top. Now, which one will this be? Will it be a continuation? If we don't rally ahead of the Fed or try to put in a bottom ahead of the Fed, could give us a bottom and rally back up to get the lower high or the divergence, one or the other. Or we rally ahead of the Fed, it could give us another top. Over here, we had a top there in December, and then we got a top right here in February, a top followed by another top. We could see something like that. If we don't get a continuation and we rally ahead of the Fed, they could give us a top. So again, I'll be watching to see how it unfolds, but we've been getting these tops and bottoms and continuation patterns surrounding the FOMC meetings. So I'll be watching to see which one this is. Do we rally ahead of the Fed? Then you got a shot of a top followed by another top. Do we get a continuation pattern? Do we get a bottom? Does the Fed give us a bottom and then we try to rally, form the lower high or the diversion? So I'll be watching to see which one it is as we lead up to the Fed. Do we try to rally or do we not try to rally surrounding earnings? Do we bounce off the 20-week or do we break the 20-week in the weekly time frame? The S&P tries to rally and NASDAQ try to rally surrounding earnings, and we start seeing the 10-year begin to drop back below the 10-period moving average, then we can get a bigger rally. But if we start seeing the 10-year surge, we start seeing a bigger drop down below Friday's lows and back below the 20-week moving average on the S&P 500, then again, the 10-year could still rise up to the upper channel. That could produce a bigger sell-off down towards the 200-period moving average, as I talked about over the weekend, before we get any kind of meaningful bounce. Again, while I think there could be a bounce surrounding the 20-week, if you lose it, well, you lose it. Then you go down to the next level of support. So I'm watching this to get a black candlestick. I warned you as we were forming the little double top pattern. We hit the peak here off the trend line, and then we formed that little double top pattern, moving 3 points above that peak before we had the sell-off. I warned you there was this divergence between TLT and the S&P, and now we've seen it play out with TLT turning down the 20-year Treasury bond fund and the S&P turning down. They have a positive correlation for the most part, but they form that divergence, giving the warning. So again, what happens with the 10-year yield, which moves in the opposite direction of Treasuries? If it goes down further, then again, have to drop lower before we get any kind of meaningful bounce. If it goes higher, then the stock market would likely go lower. But starts to pull back ahead of the Fed meeting, might try to get a bigger rally surrounding the earnings this week. So we'll be watching 20-week moving average. The dollar has a negative correlation with the market right now. The dollar got a little doji today. We got a little black candlestick on the 10-year yield. Do they sell off? If they do, we can see the market try to find a bottom with a higher low or a lower low divergence. If we can claw our way back up right now, you are trying to form a divergence on the RSI right here. So again, we'll be watching the dollar and the 10-year yield very closely. Pull back, then the S&P can try to find a bottom, either again having Friday's lows hold or dipping below them and trying to form a divergence there on some of the indicators. Again, we saw the divergences form on signals in the weekly time frame. It did not, like here on the RSI. We saw it form on the daily chart. So signals played out. The S&P has dropped nearly 6%. It's trying to bounce. It's dropped over 8%. Come down to the 20-week moving average. NASDAQ dropped below it. S&P dipped below it, but then closed back above it. Checking to see, do we get a low there, or do we test the low and then rebound? About over here, how we rebounded off the 20-week moving average, and it gave us a lower high for the July topping process, a lower high in September. I talked about over here how we formed a divergence at the top. A few weeks later, went slightly higher, or over here, slightly higher. We've talked about this at great length and detail of the top there in 2020 and 2022. Which is this? Should we bounce, we'll be looking for a lower high to go to 5,200, fill the gap, and then turn down. Or if we can go higher, we'll be looking for a new high going to 5,300, forming a negative divergence going above 5,300 and likely hitting the upper channel, forming a top with a divergence or a lower high. One of those two scenarios. The other scenario is that we plow on through the 20-week moving average right here, right now, and can't get back above it. So right now we're trying to bounce off of it. We may dip below it again, but it just may be that we form a divergence on the intraday charts in order to do that. Maybe some of the signals in the daily time frame. Again, I'm watching this closely. If we try to bounce here or go a little bit lower and try to bounce, dip below it and try to take out Friday's low, you could see at least a 5% rally back up to 51.99 would be a 5% from Friday's low. It's our 78.6 Fibonacci at 51.98. So that 5,200 area, we could see a bounce to that. And again, if we form a divergence, you can go above 5,300 very easily if we try to get above the 78.6 Fibonacci surrounding the Fed.